Taxes and Income Lesson 2, Types of Income. In this lesson, you'll learn about the different types of income. There are a lot of different ways to earn money, but we're going to break down 4 of the most common categories that income falls into. Earned income is also known as active income, which is money you earn from actively working at a job or in a business you own. You trade your time and skill for money. If you stop working, you stop earning. The most common forms of earned income are wages, tips, salaries, commissions, and bonuses. This type of income is usually subject to federal and state income taxes. Examples of earned income are working for an employer, driving for Uber Eats, making and selling stuff on Etsy, or even creating an account on something like rover.com and getting paid to walk people's dogs. Unearned income is money that you receive without working for it. Examples of unearned income are things like money you get for a birthday or Christmas, an inheritance when someone passes away, winnings from gambling or the lottery, earned interest from your bank accounts or investments, and stock dividends. Unearned income is a type of passive income. Passive income is money that is earned without you actively working for it, and it has become quite the buzzword in today's online world. Everywhere you turn on social media, it's all about earning money in your sleep with passive income. The goal is to put in the work up front and then get paid for your efforts over time without having to put in constant effort to maintain it. And while there are ways to set up systems and automate things, there will always be some form of work required from you, so it's not entirely passive. For example, you could create an online course or digital product and have a website that allows people to purchase from you and get immediate access to the product without you having to do much of anything. However, you will still need a way to tell people about your products. This could be done through blogging, a YouTube channel, a podcast, or other forms of social media such as Instagram or TikTok. Creating good content that entices people to want to buy from you requires a lot of time and effort. So while the product does earn you income passively, you still have to do work to get eyeballs on your product. Another example is buying a property and renting it out either long-term or on a site like Airbnb. And while this would create additional income, you are still responsible for communicating with tenants, cleaning, and fixing things that get broken, which requires time and energy. You can pay a property management group to do this for you, but that's pretty much the only way to be hands-off. The important thing to realize is that most things that are sold off as passive income aren't entirely passive. There are definitely ways to create multiple streams of revenue that require less effort from you on a daily basis, but if someone tells you that they became rich doing nothing, run the other way. Under the table income is basically any income that you receive that's not reported to the IRS by the person who paid you. By law, employers must report and pay taxes on income their workers earn. Under the table income is considered off the record because it's not being taxed like other types of income are. Technically, it's illegal to earn any type of income without reporting it to the IRS. The most common ways that teenagers earn income under the table are by babysitting, house sitting, pet sitting, mowing lawns, and cleaning. The advantage of under the table income is that you get to keep all of the money that you earned, but the disadvantage is that it's technically illegal. You just learned about the 4 common types of income. In the next lesson, you'll learn how taxes can affect your paycheck with earned income.